Strap yourselves in. We have a busy session ahead of us. We're going to be taking a look at the S&P 500. Major levels have been broken, not only on the S&P, also on the Nasdaq. DXY breaking out, gold smashing through critical levels over here. Silver already has. It is pretty much a bloodbath out there. Bloodbath is appropriate. We have a lot to talk about. This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. We're going to start it off with over here on the Nasdaq instead of the S&P. First, we're going to focus in on the Nasdaq. First, we're going to focus in over here on this bear trap. Jordan, oh my goodness. I can't believe you called this bear trap. And then look, price has faded outside this channel now. First of all, listen, if you're following the markets, couple of things. You better be prepared to be wrong. You better, as soon as you're wrong, take your loss. As you enter a trade, you always know where you're wrong and where you're getting out. As you enter a trade, you always know what your risk per trade is. The most important thing in trading is risk management. No one should get even a little bit burnt on any individual trade at any time whatsoever. If you are trading and you want to be successful, you better know how to manage risk. Look, let's call a spade a spade. You ready? I was wrong over here on calling this a bear trap. Rightfully so, though. If I did it again today, I would make the same exact call because at the end of the day, I'm just following what's on the charts. Is it possible that tomorrow we trade back up in and this breakdown over here is nullified? Of course. Listen, that's trading. Trading's all about managing risk. Now, I don't have to go and tell you. Why? Because we have a year's worth of videos on the channel showing my history, showing how more than often I'm on the correct side of the market. Is that always? Absolutely not. Are there periods where it's very difficult? Of course it is. Let me go ahead and make this darker so that we could all follow and see what's going on, because this is an important session ahead of us. We have a lot to cover. We have to make sure that we're able all to be on top of the moves that are happening and make sure no one gets left behind. All right, let's do that over here. Let me click that out. This is circled over here because there are certain times, there are certain periods, things are very difficult. And by the way, the most difficult time is always during a change of trends. It is always the single most difficult point to trade. The sweet spot, the spot that we're looking for that we trade upon, is the easiest. Trend changing is always the most difficult, and you're going to have losses as you lean into the support, as you rightfully should be doing. All right, let's take a look over here. What's going on right now? Anyone who took this long trade over here, right over here on the morning in the live stream. Beautiful trade, by the way, right? We talked about exactly where your stop loss was if you were in that trade. As we came into the resistance, maybe some took a little bit off and moved their stop loss to break even, or maybe some didn't and got stopped out. Nevertheless, that's a small stop loss. If you can't take that, this is not for you. You're not going to be able to make it in the markets whatsoever. If you expect that every trade you put on is going to be correct, this is not for you. There's no way you're going to make it. Or if you expect that I'm always going to have the clearest read on the markets and always be right, this is not for you. You're never going to make it. All right? That's not how this works. Here we are right now. We lost this trend line over here. This was the trend line of hope, right? Above it, we still had a chance to regain the resistance over here, horizontal 33, 39, and the trend line resistance over here, that big level that we said over and over. In order to look bullish, we needed to regain. Okay, we haven't regained that. Things are not looking bullish. Could that happen? Could that happen soon? Maybe. Is it possible that in the next couple of weeks, in the next few weeks, a couple of weeks before the election, that emergency stimulus is sent out from the Treasury under the executive order of the president? Of course. What will happen? Will markets all of a sudden bounce like crazy? Of course. Be careful out there. This is a very difficult time to trade. Anyone who's paying attention knows ever since right over here, ever since we made all our take profit objectives, I have been saying equities are risky. Equities are risky. Equities are risky. That hasn't changed. Nevertheless, as I said, I'm going to continue to navigate them with you. I'm going to continue to do that right over here. The question remains, are we going to see a bigger breakdown over here right now? Are we going to see a bigger breakdown Or are we going to trade sideways for a while? I have no idea. We're going to take each day as it comes and look for our setups. By the way, should someone be short here right now? Not me. I'm not. We just lost this trend line over here. Some people have the need always to be in the market. If you took this stop loss over here, the worst thing you could do is flip short. That's the worst thing you can do. You don't need to always be in the market. When you get a breakdown, today we saw a breakdown. We lost this support over here. Stop losses got triggered. I don't know if they got triggered at break even or if they got triggered for a loss right over there. Either which way, stop losses got triggered, which is what they're there for. Make sure you respect your stop losses. Never adjust them. Never change them. That's important, right? But we've so far have broke down so far into an area of support. We have support over here at 32.32. We have support below that at 3,200. Okay? We're waiting for a bounce. Do you buy the bounce? No. If you come down into this, do you buy the bounce? No. Why? Things are looking very bearish. We're now only on the S&P looking to trade from the downside. We're only looking for the sell side trades, but we're waiting for that first bounce and retest of a broken support turn resistance. That could either be over here into this trend line over here. It could still be higher. It could still be back into that trend line, or it doesn't have to play out like that. You could get something like this happening overnight. We could get a further continuation. Maybe we bounce off of 3,200, and this broken support. Maybe that's what's confirmed into resistance. Is that something you then sell? Yo, yeah, that's a money shot right there. If it plays out like that, we don't know what's going to happen. Is it possible that we're setting up for a little bit sideways trading right now? Yeah, that's all possible too. Maybe we bounce off the support. Stay on the sideline. Wait for clarity. There's no clarity here right now. The only thing that's clear right now is at this point only looking for shorts on the S&P 500. You have to wait for your setup. You just don't jump in short. That's why a lot of people, what they do is they buy into support and they wonder why as soon as they enter a trade, all of a sudden the trade goes against them. That's because they're momentum chasers. We don't chase momentum. We're preemptive of momentum. Do not think for a second that you're going to have a win ratio of something ridiculous, like 70, 80, 90%. That's absolutely atrocious and ridiculous. If you can't take a loss, this game's not for you. It's too tough for you. That's all right. You have to know that you're not capable of it. I see a lot of emotional people out there. A lot of people really ready to be like, oh, I can't believe it. You said this was a bear trap, and you're wrong. Well, I haven't had to say that in a long time. The last time that I had to admit that I was on the wrong side of the market was all the way back here in May. Big deal. I have no problems, no qualms about being wrong. I only want to know what's correct. I only want to know what's correct. I want to be on the right side of the market. And if you think that's easy, the market's going to humble you way quick because I know how difficult it is. I know how well I read the markets, and I know how difficult it is. Nasdaq, let's take a look over here. Yeah, this was absolutely a bear trap as we broke down below the trend line over here, below this support over here, and then peeked back into it, right? It got people on the wrong side of the market. It got which people on the wrong side of the market? It got bears on the wrong side of the market. Who's on the wrong side of the market right now? Are bulls on the wrong side? Look, anyone that's following me, the worst stop loss they took was over here, right? Right over there. It's on the live stream when we entered the trade where we said we have to use a very, very tight stop loss. It's just go back, look at the live stream when the trade was entered, right? Are bulls on the wrong side of the market? No, bulls are neutral. Bulls are chilling out, ready to attack now to the short side, right? So what about over here? Should you exit the trade over here? No, first of all, I was also very clear there are no trades on the Nasdaq, right? There were no trades on the Nasdaq because we were not buying into the resistance, right? So no one is long on the Nasdaq, first of all. If you were, you're closing below this support over here, this channel support. You're closing below. This is now resistance. Let me go ahead and flip these lines for you. I want to make sure everyone has a clear plan because some people they have a little bit of bias where they're only hearing what they want to hear. All right? I want to make sure that's not the majority of you. I know that. That's clear as day. But there are some people, and I want everyone to be clear I don't want anyone throwing any confusion out there. If you should, no one should be long on the Nasdaq over here. You just close below this area of support over here. Should you be short? No. I said this morning as we were coming into that resistance over here, as we were being rejected, I would not take that short over here. And I said I wouldn't take it because you have this support down over here at 10,894, that horizontal support. And you also had that support over here, this channel we're in. I would not take a short into that area. What about now? Do I go short because I closed below there? No. I will not go short on the Nasdaq until we have some type of retest of resistance and it's rejected for an entry. Are we going to just bleed down over here and go down? No, it's not going to happen. You're definitely going to have some type of retest. A retest, by the way, right now, as you're looking for the short side, only looking to trade on the short side right now on the Nasdaq, only looking to trade on the short side right now on the S&P. Is anyone looking to buy the S&P off this support? No. No. Could that be the low? Maybe. Who knows? If we regain this area over here, if we regain 33.39, we will be looking to trade from the long side again. Not right now, though. Right now, we're looking to sell resistance. We're looking for a retest of a resistance and any type of sell. By the way, I need to throw this in over there. By the way, do you see this area over here, this little bit of resistance, right? Follow the mouse over. Do you see over there? That also, I'm going to put a trend, a horizontal line over here. This is resistance. I want everyone to be aware of it because we might not come up all the way to test this trend line over here. We could be rejected over here. That's a place to look to sell. That's the only thing that people are looking for right now in the S&P 500 is waiting for a retest. The retest we define as at least a higher low on the following price bar, at least a higher low, right? We're looking to see if this resistance holds, this horizontal resistance, and or that trend line. I'll leave them highlighted right now until tomorrow. Those are places we'll be looking for price to be rejected, and a resumption off will offer a shorting opportunity. Should someone short right now into this area of support with the supports just below it, 1% below it? Absolutely not. Clear as day. Nasdaq, what happened? Well, no one was, first of all, long on the Nasdaq. Second of all, if you were, come on, you're closing below important horizontal support and this channel support. You're out of the market right now. What are you doing? Oh, I want to get short because the market's fallen. The market really could come in hard now. We've broken important technical levels. We are only looking to attack from the short side. What does that mean, attack from the short side? We're only looking to sell the indices right now. If we get a setup, what does a setup on the Nasdaq look like? Well, it's not happening yet. We got to wait for, this is resistance right now. This area is resistance. More importantly, horizontal resistance. That's resistance that we're looking for. Up in this area, that trend line, that prime trend line with that horizontal resistance, that's also a nice area. Let me point these out for you like this. A rejection here, that sets up a short entry on the Nasdaq. A rejection here of that horizontal 11,066. I'm trying to call out the levels for you. That rejection there, that sets up a short, or a rejection of that prime trend line, that sets up a short. All those things could happen. That's what you're waiting for right now. What happens if none of those things happen? What happens if we trade down, right? If we trade down, by the way, do you see this line right over here, this green line? Hold on one second, let me show you. This is green, this is light support. Was it not in play? Is it in play now? Well, yeah, it's a light level though. On the way down, if we blow through that, we'll be looking for that as horizontal resistance as well. I'll walk you through it as it happens, but everyone who's trigger happy, fall back. You don't always need to be in the market. Wait for that clarity, all right? The dollar, everyone's clear, no? I went extra slow here, spending extra time to make sure that what? Everyone has that clarity. Everyone's on the right side of the market. That's what's important. DXY breakout here. The counter trend trade has started. All right. So first of all, what happens? Bears are a funny bunch. All these macro guys who have been like, QE is deflationary. Tech is deflationary, right? What does QE do? It inflates asset prices. Look around you. If you can't get that much, you're missing out over here. But right now, they're all now finally, after being wrong since the end of May, they're like, well, see, I'm right. Well, no. This is a counter trend move. What do I mean by that? Counter trend. The trend is down. Hold on. The trend is down, and right now we're seeing a counter trend move. That is, we're looking for the next area of resistance to sell. Brad shared this beautiful chart over here. This is the DXY, okay? I just want you to see these lines over here. Do you see how this line over here? These are cloned lines. He cloned it over here. Then you see how this touch over here, this was then the resistance. This has now been support. Cloned it again over here. This goes up to, I think this is May 19th, right? You see this area, resistance. That is what we're looking at. By the way, here's another line right over here, cloned as well, right? Trade back below this trend line over here. We now broke out above. That would negate this breakout we have going, this counter trend move. Focus right over here. Here's where I want you to focus, where my mouse is. This is somewhere around 95.20. This is where I want you to focus, because this is the first resistance we're going to be looking for this move to end. Follow me over here. I already had a horizontal at 95.20. It's the same exact line. I'm going to highlight that line over here and keep it on our charts now. This is the one that Brad has introduced. Okay? By the way, and watch this line also. I don't want to confuse you, but this is so important right now with the DXY. I'm going to make this one lighter. This is the prime trend line. So I'm going to make it a different color so everyone knows what it is. All right? I'm making that a blue. I'm making it lighter right now, but that's the prime one. What do I mean by that? All right, first of all, two things. I want everyone to look at this. This is the area. Look at these three. This is that one trend line Brad introduced. My horizontal resistance at 95.20, and then this trend line that I'm about to show you. All three, that's a big area of resistance. That's a big area of resistance, and if price is able to make it up there, which it should, there's a good chance it will, right? Does that mean that if it doesn't, I'm wrong? No, that means this is what we're expecting right now. I will be looking for a rejection over there, okay? That's not a big move on the dollar, by the way. Now, is it possible it breaks out over here? Then I'll bring out my prime trend line, this blue line that I have marked over here. But I want you to see first. I really want you to see what this line is. I'm coming to the 3-day right now. You see this line over here? Again, just so everyone's clear, this is the prime trend line. I'm going to make it dark right now so you can see this. This is the prime trend line right now. This is the important one, right? In order to regain the bullish structure that the DXY had, that the dollar had, it will need to trade above this blue line over here. Right now, that's coming in somewhere around, let's call it 96.40, only because I have strong horizontal resistance right there as well. And by the time we made it up there, that's where we would be. So until the dollar is trading above 98.40, it is structurally weak. A lot of damage has been done. Is it possible that it regains that? Yeah, of course. Right now we're looking at this. That's the prime trend line, by the way. All right, so now I'm going to fade it because it's not in play right now. I want to keep my charts neat. This line over here is the clone trend line. This is the first area of resistance. They both come in. That's this line right here. This is the area that we're focused in on. This is what people should be targeting. Okay? What's next? If that happens, is that going to put further pressure on gold? Right? Clear reading on the DXY. Go to the daily time frame with me really quick just to confirm with you. We've now closed above the resistance at 94. This is now a counter trend move that's taking place on the dollar. We're looking at this first area of resistance. By the way, that 95.20 you can see over here, it's a big level. This was all resistance. Since then over here it was support. Support again, it's broke. It's a big level over there, right? Before the dollar bulls start getting so excited, man, make it above your first resistance level. That's your first resistance level. Let's see if you can make it above there. All right, so settle in, everyone. Let's take a look at gold because it broke. And keep in mind the DXY we just spoke about. If the DXY makes it to 95.20, right? What does that look like on gold? Now, first of all, do not trade the precious metals off of the DXY. Of course, you guys have, it's a dollar story. Where have you heard that before? It's all a dollar story, right? And here you could see it playing out. And the reason I say that is because I've, for months, that's all I've been ingraining in everyone's head. It's all a dollar story. Here we are right now. the dollar breaking out, and we see precious metals breaking down. Silver, the canary in the coal mine, broke down yesterday, right? That broke down yesterday. By request this morning on the live stream, we cloned this beautiful line, this beautiful trend line that Tom added on gold, right? Over here, you can see it. I've also added it now to silver because he pointed it out and it's correct. Same thing over here. We added then this morning on the live stream. Someone appropriately said, let's add it there because you could get some support right over there on silver at 22.20, right? By the way, do you see that? Also, I want you to see it very quickly. Follow my mouse. Do you see this area over here where it was support? Right over there where I'm putting my mouse? Do you see that coincides with that trend line over there? Is that a level to watch right now? Yeah, it's a level. It's not a big level, but it's a level to watch. Break below there, that's when the party's getting started and we could see a bigger breakdown. Are precious metals still in a bull market? What happens, Jordan, if we break down from here and trade all the way down towards, call it 19, a 36% pullback on silver? Would I still consider that the precious metals are in the bull market? Absolutely, 100%. Why do I say that? Well, look at the same move that silver's put in, right? Since March, in 6 months, 165%. Would a 1/3 pullback be appropriate? A little more than a third, right? Be appropriate? Yeah, that's fine. Don't worry. Nothing's changed when it comes to signal. What signal? What's the Fed doing? Expanding their balance sheet. What's the only option central banks around the world have? To print more money. What's happening to fiat? It's being devalued. What about the dollar? The king dollar. The dollar is coming roaring back. Not yet, it's not. And do you think by any chance that the Federal Reserve is going to allow yields to rise? Come on. Of course not. They can't. The whole system is completely jeopardized if they do. They will smack that down as soon as it rears its head. And as they smack it down, precious metals are going to fly to the upside. All right, I digress. Over here, let's follow what's going in on the charts. We've lost major level over here on gold, right? We've broken outside of this trend line over here. We lost 1880 support over here. That's now resistance, right? So same thing. Anyone who's involved right now, by the way, there's no one who's obviously long gold on paper right now, right? Everyone knew their levels. Everyone knew where to get out. What happens now? Are you looking to short this? I'm not looking to short it. Is it possible that we have a much bigger correction on gold, into the 1800 or 1750? Do I want to short that on paper? No, I don't. You could. I don't know what's going to happen. Trump could tweet tomorrow. Executive order, stimulus. I'm not doing it. You could do it. If you're doing it though, what you're looking for is now a retrace into resistance. It's very simple. A retrace into resistance and a resumption down. That's your signal over there. Would I short the equity markets, the indexes? Yes, 100%. Why? Because as you all know, I've been saying now since the first week of August, equities are risky. Equities are a bit. It's not like it's the first time you heard it. Just go back and watch any video along these lines over here, and over and over and over and over again, I'm like, equities are risky. Equities are risky. Melt up, melt down, now breaking important trend lines over here. Now structurally, we're ready to attack to the downside if we get the trade. Silver looking, obviously, you know what? It on the upside, silver rockets, and on the downside, it's going to dump as well. It's more volatile. It's why I personally prefer gold, right? Now, I own both physical gold and silver, right? And I have for a long time, and I don't plan on selling it ever. And if you ask me, is it possible in 2021 that we're going to see gold trading above $3,000? I'd say absolutely, that's possible. 2022? Oh, yeah, that's highly probable. What about silver? Are we going to see $100? Are we ever going to make a new all-time high on silver of $50? It's a question of when, not what if, in my mind. Precious metals are on sale today. Those looking to accumulate for the long time, get away from the paper markets, make your money in FX, swing trade FX, the better market, and continue to accumulate physical gold and silver. If you're accumulating the physical stuff, now this is a sale day. Now, could we go lower over here? Yeah. By the way, if we break this level that we just looked at over there, the next target is definitely 1890 over here, right? Between 1936 and 1890, right in that area for sure. Okay, so there's much more downside to watch out for. Do I think that you should be shorting it? Look, I think that's dangerous. I think that's really dangerous. Let's see if this line over here holds now. Let's see if this line of support comes in as support right now and holds. It's possible. Would I go long if that holds? Not on the paper. Not on the paper. It'll be a while before I think that we've improved here, that the precious metals, which first of all yesterday on silver, today on gold, have broken down technically. I'm not looking to go long on either one of them until they regain their bullish structure. That could be a while. That could be a long while. That could be into after the election. I have no idea. That could be until after 2021, but it's going to happen. All right, we'll work our way through it. Right now, everyone should have, stay away. Are you accumulating physical? Great. Right? On the paper, it's not the time to buy. Selling, super dangerous. All right, Bitcoin. Let's take a look over here. Bitcoin breaking down over here. Bitcoin losing the 10,570 resistance. You could see it play out perfectly. It held. I had no idea which way it was going to break down. It hasn't closed yet, by the way, for the day, the daily candle on Bitcoin, at least for myself. Then that won't be for quite a few hours still. Is it possible that it pumps back up into this channel? Yeah, that's possible, right? Simple and easy on Bitcoin. Until you take out 10,572, right? Do not look to buy back in. If you're able to clear back above there, at that point, you're definitely looking to get back in. That's super healthy. If we lose this area over here, the next thing that we're targeting is where the bull market began, right over here. Follow my mouse. This was also over here, the area of support. I would give it a higher probability this time that breaks. If that breaks, could we easily see the close of the gap, of the CME gap right here at 9,600? You betcha. If you're looking to buy in over here, I would have orders waiting because it could be quick. That could be a quick spike. You might not have time to place orders in this area over here, right? Hanging on that trend line over there. That trend line should now be support. Let me back out over here. You could see it is a prime trend line over here. It is a big deal. It should hold as support. I maintain, I don't think we ever broke down over there if it were not for the dollar liquidity crisis. Are we seeing a dollar crisis right now? Are we seeing dollar shortages? Not that I'm aware of whatsoever. I do not think so whatsoever. Be prepared for anything 2021 has shown for us. Is it possible that we come down we wick down over here? I do not think that we trade lower than 8,800 if we trade down that far. By the way, that would be a what? A 30% pullback, not even, but almost a 30% pullback from the all-time high. Be ready for multiple 30% pullbacks on Bitcoin. A lot of people, when we were just pulled back over here 20%, they couldn't take it. Bitcoin's not for you. It's for the big boys. This is where the money's made right now in the bull market. But if you can't hang on for a 30% pullback, and don't forget, in the last bull market, there was a 40% pullback. There was seven 30% pullbacks, one of them 40%. If you can't ride that type of volatility, this is not for you. By the way, not only myself, but 63% of other people holding Bitcoin for over a year, we all roared out this 62% drawdown in the bear market during the crisis. So if you think we're getting shucking out over here, no, that's not happening. We're holding strong. Nevertheless, there's the technical levels about what we expect to happen. Does that mean it's going to happen? No, the whole reason that we lay out what could happen in the scenarios on both sides is so that we're prepared and there to take advantage of things as they do. It's all about managing risk. It's not about predicting the future. What else is there? Let's take a look at a couple of other things. This is, by the way, stimulus. This is a comparison of Democrat and Republican stimulus plans. This is already passed. Here we have the Democrats looking to pass another $3.4 trillion of stimulus. And this is by the New York Times, by the way. I do not believe this includes Vice President Biden's renewable energy plan. I think that's another couple $1 trillion. You notice how that we're now throwing around numbers like trillion, like it used to be billion, right? What's happening to fiat over here? So this is some big numbers here that need to go to some states that are in trouble, some big cities over there. If the Democrats win, that's going to happen, and it's going to happen very quickly. The low end they're talking here on the other side of the aisle is $1.1 trillion. Now, that's not meeting anyone halfway. That's their low end over here, $1.1 trillion. We looked at this yesterday. This is coming from the Congressional Budget Office. This is their budgets going into when, right? Look at the next couple of years. Here's where we are today. It's already enormous. Look how steep it's expected to get. By the way, have you not noticed that when it comes to these government budgets, they always underestimate what the actual number will be? And these estimates that they're projecting are by no means shy, right? Look at this sharp increase they're thinking that is coming in the next couple of years. That, to me, my friends, is signal. When I'm talking about right now owning scarce assets, whether it's real estate, be careful about real estate. They're going to be raising taxes. There's no doubt about it. Why do I even say that? By the way, this is 39 states right now do not have enough money to pay their bills. How are they going to raise money, right? Real estate is going to be one way over there, for sure. Careful about that. Fiat is going to continue to be devalued. Own scarce assets, Bitcoin, gold, silver. It's all delicious. What else do we have over there? By the way, I want to share this with you right now since I'm on a roll, right? I've talked about before, I've talked about, especially during the crisis, that eventually this is going to end. Eventually this is going to end with UBI. This is going to end with the Fed making deposits straight to people, bypassing the banks. Look what was released today, by the way. This was released over here on the Federal Reserve Bank of Cleveland. They talked about payments and the pandemic. They talked about setting up individual wallets over here. Right over here, it's called FedNow. By the way, in the first stimulus act, the CARE Act, in the first version, they already had the language in to be depositing payments into digital wallets of people. It was taken out. They already have the law written for this stuff. They didn't just write that law overnight. This is what's going to be the answer to the next crisis. Now, they're not ready yet. They don't have this rolled out yet. They're talking about a target release of 2023, 2024. This is going to be the answer to the next crisis. It's going to be sending money directly to Americans, right? By getting money to consumers, you can limit the depth and duration of the recession. Banks, goodbye, they're gone. I've talked about on this channel since I started that the end game over here is going to be the central bank digital currency. This is from the IMF, the CBDC. I say that the Federal Reserve is going to be sacrificed at the altar. It's going to be the new Lehman. They're going to save the system by introducing the CBDCs. At that point, by the way, and if you read this, it talks about there is no more an enemy. Physical currency will be gone. Right now, obviously, the most laundered money in the world is the US dollar. The most money used for illegal activities is the US dollar. It won't be possible. They'll be able to track and trace everyone, cut everyone off from the system. It's all centralized by Bitcoin. Bitcoin is the case for freedom over here. I'm going to get into this later. I'm just a little passionate about it because I've seen this coming now for years. I've been following all of the IMFs, every release they've had as they've been putting together the central bank digital currency, the CBDC, what is taking place. Now, what I want to focus on right here, right now with you is right over here when I said that this won't be ready by 2023, 2024. I said it before. I said I don't think the next crisis, I think the Fed over-responded on purpose. So $4 trillion. Another $1.5 trillion a year of commitment already. I don't think that we have another dollar crisis, right? I pulling a number out of my head, I said 6 years, right? This only gives us another 3 or 4 years. They'll be ready 3 or 4 years from now. All right, everyone. What else do we got going over here? I think we went a little overtime over here, but it was an important session. The clarity here today is we have broken major technical levels here on gold. Stand back, fall back, wait now, wait for deeper levels to buy back in, or wait for a massive improvement over here. Then we'll start going long again. I don't think that happens just yet. It could be a while. Over here on silver, we broke this major level over here, right? 26 was the number I drilled in everyone's head forever. If we lose 26, we've lost the bullish structure. If we lose 26, we've lost the bullish structure, right? And I've seen it in the comments. I've seen people clearly point out that they knew that level because everyone knew it. Over here, right? This is an important level to watch coming up in the next, 24, 48 hours. To see whether or not this holds over here. You could see that's pretty good looking support over here. Will it hold again? If it doesn't, then we're expecting a much bigger correction. And it could happen quickly. I think, and why I say do not trade to the downside, is because you could see just as quickly as we're breaking down right now, you could see us trade up just as quick. Careful out there, everyone. Careful. And when I say careful, I mean be careful. Right now, the equity markets, we've broken some major critical levels over here. It is quite possible, equities are risky. It is quite possible that we have going in the next 6 weeks and beyond 6 weeks, by the way. November is just the election. Do we know, or everyone's aware that we might not know who the president is going into and through Christmas into 2021. There's going to be lots of games played. We'll see. Maybe we don't. Maybe we don't. Maybe it's a non-event. You got to be careful, though. You got to be really careful. By the way, is the sidelines a good? Do you have to trade to the downside? No. Would I happily? Right? Happily. You all saw what happened over here. I was all over this, like nobody's business. And on the upside too over here. Now then it got tricky over here. Yeah, it got tricky over there. Guess what? It's tricky right here, right now. But I've been saying over here, this is when I got neutral on equities, right? That's when I said from now on it's risky. It continues to be risky. Doesn't mean I'm not going to navigate it. I'm going to navigate it every day with you, all right? And that's what we're doing right now. So everyone, again, this is getting interesting. It's time to be and I've been saying that as well, right? Go back for the past week. How many times that I've said, now is game time. Now is time to be sharp. Why? Because now it's extra tough. And that's what it is. Either you got what it takes to make it or you don't. All right? I hope you do. And by the way, this was beautiful to read. Someone asked just in yesterday's video that Ken asked whether or not he wanted some feedback from those who have paid for the 1-year mentor course, right? And he's saying that he's interested in it. He's interested. He would like to know. He'd like to know how to play both sides of the market. By the way, I'll include this comment over here in the description if anyone wants to take a look, because a bunch of people have responded. Greg saying that, you know what, try it for a month. It's a cheap date. You're going to learn a lot, meet some interesting people. After a month, you can decide it's for you. You could always upgrade to the yearly course after there. I'm on my 3rd month of the yearly program and trading Forex profitably. Greg, in the live training session on Tuesday, he's up 4% now on his 3rd month of consistently profitable. Ready now to go ahead and increase his risk and get towards that 2 to 3% goal a month. Does anyone understand the significance of that? That someone could jump into a course working with me that cost next to nothing, and then all of a sudden turn into a profitable trader? If you're trading the markets and don't have an appreciation for how difficult the markets are, you're going to find out. They are extraordinary. Trading is one of the most difficult things you could do. Trading is one of the most difficult things you could do. And he says he agrees with Greg. He joined 3 months ago, right? After watching the YouTube live streams and daily updates. His course and methods are extremely clear. extremely clear, and will make you a profitable trader. The chat community is a great community with supportive members and a great place to post your trading ideas to get feedback from the rest of the group. 5 months ago, I didn't have a clue what technical analysis was. I didn't even know what Forex was, because a lot of us Americans are only focused in on the public markets. I'm now a profitable paper trader and will be switching to a live account soon to put my newfound knowledge into action. I would add, though, I was trying to trade the indices when I first started, got eaten alive. If you do join, again, do the month first to see if it's for you. I highly recommend focusing on the Forex market, as I do. The Forex markets and charts are much more clean. They follow technical analysis much better than indices. I hope to see you in the group soon. You won't regret it. Giles, by the way, and I just have to finish because this is, you can't understand. I've been a member since May. Before signing up, I was weeks away from blowing my first account. Since committing to the strategy, I haven't had a single down month. Do you guys not understand? If you want to do this successfully, this course is a no-brainer. Look at this. Definitely worth it. If you follow the direction and make the time to do what was required, right? Lots of sharing of ideas and support. Ken, I joined the course early this year. I cannot recommend it highly enough. There's no better system out there that can take any level of trader step by step through the stages of profitability. Couple that with the community of people within the course from all levels of experience, the private lessons we all receive from Jordan, and he makes this tiny investment for the course the best money you can spend on yourself. Ken was all about that feedback. Everybody, we'll see you all tomorrow morning. I'll see you at tomorrow because the markets right now are alive. Things could change drastically. I don't want to hear anyone saying tomorrow, Jordan, if the markets trade back up tomorrow, Jordan, you said right now we should only be trading from the short side. Yeah, absolutely. You should only be trading from the short side. That doesn't mean you should be short the market. Everyone who watched this video should know that. All right, everybody. I'll see you all later.